Good morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 31st August 2021. In the international market, US Treasury yields fell on Monday as the market looked ahead to the release later this week of the August employment report and the possibility it could factor into the timing of the Federal Reserve's tapering announcement. The very strong non-farm payrolls will indicate the reduction in the bond purchases may start as early as September 2021. US 10-year ended 2 basis points lower at 129 and 30-year ended at 190 percentage points on Monday. In the crude oil market, crude is trading at $73 per barrel. Short-term range for crude is 70 to 73. In the currency market, dollar index DXY is at 92.66. Today's range for DXY is 92.55 to 92.91. The next move in the DXY will be now for Friday's non-farm payrolls data. USD CNY or Chinese yuan is at 647. USD INR with a high of 73.54 closed at 73.29. The strength in the rupee continued yesterday as well and closed at 73.29 levels. Support at 73.15 and resistance at 73.50 will exist. In the domestic market, US Federal Reserve Chairman Jerome Powell's comments on Friday suggested that the US Central Bank was in no rush to hike rates. Domestic bond traders viewed these comments as an assurance that the US would keep its policy rates unchanged for an extended period. At the same time, the rate hike cycle would be of a lesser magnitude, which could also ease any pressure on the Reserve Bank of India to raise rates. Domestic traders expect that the RBI could replicate the Fed's likely strategy by scaling down its liquidity support while keeping policy rates low for an extended period. Traders covered their short positions in 664-2035 and a steep rally was seen yesterday. GDP data to be announced today after market hours. GDP is expected to be around 22% or more purely because of the base effect again. Any miss in the GDP estimates would mean the accommodative stance would be continued for a long period to support growth. GDP numbers meaningfully beating the expectations would mean RBI would soon move towards normalization and a fall in bond prices. 563-2026 closed at 565 versus 569 the previous trading day. 664-2035 closed at 678 versus 681 the previous trading day. Trading strategy for today: 610-2031 at 622 is not attractive anymore. Remember, for the past few sessions, we were saying that 610 GS 2031 is attractive, but for 622 levels, the attractiveness is no longer there. Do not hurry to book profits as the coupon income is good and the market sentiments are positive. But based on individual banks' scenarios, one can book profits with 2 basis points gain. Trading range for 610-2031 would be 621 to 625. That's it for today. See you tomorrow with the new episode of Night Snippets.